Is it the calm before the storm? We have hurricanes coming in to the southeast. We have an Apple event coming up this week, and today was really quiet. So we did bounce. I don't think it was that much of a bounce. I'm going to break that down and show you why, what I'm thinking. I'm also going to show you one stock that did bounce pretty good and kind of broke out, and we're going to look for a quick short-term trade opportunity there. So let's go ahead and get started. Today is Monday, September the 10th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for tuning in tonight. Welcome to those of you who found us, who are watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel. Mouse over the Market Scholars logo right here in the bottom right corner of your video. Then click that red subscribe button that pops out. Also, click the thumbs up icon that's down below the video. You can do that right now. That tells us we liked your video today. We want you to do it again tomorrow. Really quick and easy way to give us feedback. Comment on anything that stands out to you from today's video. There's a few things we talk about today, and we'd love to hear your thoughts on it. Also, join our daily Market Outlook email list. There's a link popping out in the top right corner of the video. Click that link to subscribe. Really easy way to do that. Follow me on Twitter for more content like this throughout the day, and join our Market Outlook community on Facebook as well as on MarketScholars.com. Now, I did want to give you a quick heads up. The sound in the next segment, when we go over the market forecast, is a little off. We had some issues there, but I was able to correct it and fix it for the rest of the video. So for the next about 4 minutes, the sound's going to be a little different. Then it will get back to normal. All right, well, let's start off taking a look at the market forecast indicator on the S&P 500. And you notice we bounced today. We did not quite get up above. You can't really see from the, here, let's hide, let's remove that drawing here. There, you can't see, you can see we didn't quite get above the high. So we didn't really technically bounce off support. And you can see that reflected in the near-term line momentum line bouncing just barely, still easily in the lower half of the chart. For the near-term line now, that's, how many days? Let's see, 1, 2, 3, 4, 5, 6 days now. And 1 to 3 is your typical time frame to maintain a bullish trend. So, that's kind of a bearish move. Now, we still have a bullish run. It's not strongly bullish right now. We have this pink shading. It's not dark pink. That's when it crosses below 50 and the run is done. That marks the end of an intermediate run. We don't have that yet. And if I were to throw on that back on those Fibonacci retracement lines, you see that if we do pull back, we see where there's going to be some layers of support, especially coinciding with this old high point from back here that's lined up with a 23% Fibonacci retracement level, and these two intermediate highs that are lined up at the same point, roughly, right below 2800, with the 50% Fibonacci line being right above the 2800 mark. So basically, that's where there's going to be some pretty strong support on any kind of dark pink bearish intermediate pullback, which, again, we don't have yet. And we'll see. And I expect a near-term bounce. I expect the near-term line to get above 50. I don't expect us to get above to new highs. And if we do, it won't be very high. It won't be like this move where we got easily up to a new near-term high. I mean, that was the breakout move to new all-time highs. We've been pulling back after that. I expect that we'll bounce off of here in the short term. I do expect here, sooner rather than later, that we'll get some dark pink shading and we'll get more of a pullback. Maybe to this 23%, maybe a little bit lower. There's some support at the 38% Fibonacci retracement as well, some volume in this area. So, if we do get those pullbacks at that point and get a much higher intermediate low point, then we'd expect to bounce off of that into new intermediate highs for the last months of the year. Where seasonally we expect things to be bullish heading into 2019. So we'll see if that ends up playing out. You can see if you look at the Dow Jones Industrial Average, it still shows a strong bullish posture. The intermediate line's falling, but still above 80. So still got a strong bullish posture, still dark green, and you're getting a bullish intermediate confirmation signal. Now, this is a bearish near-term high point. It's a lower high. It's a lower high in the price, It's a peak here that did not get between above 80, so it's below 1580, and it was only a few days above 50. So that's a bearish near-term high. But as of right now, it's pulled back to what's a bullish intermediate confirmation signal, which again is a strong bullish posture above 80 on the green line, oversold red line, and then the near-term line setting up for what could be a bullish near-term low on the blue line between 20 and 50. Again, I don't expect this to bounce up, and if we do bounce up to higher highs, it won't. You still got this area over here that can hold it back. Remember, the Dow is the only one that has not cleared that January high point yet. The Nasdaq and Russell are bouncing too, but very weakly in the short term. You can see both their short-term sentiment lines bouncing from these oversold levels, but neither one of these getting above yesterday's high or Friday's high. So it's a weak bounce. We'll see if through the middle of this week, especially that Apple announcement, if we can get a bounce up higher. Again, look for more into this area if we do bounce. I don't expect this kind of a move coming off of this low. I expect us to get into this area, if not a little bit higher, before we consolidate more with more of a bearish intermediate pullback. A quick reminder before we look at some other charts here that you can watch our Market Outlook video on our blog on marketscholars.com. Again, just go to blog here. This events, you can see our class that we have coming up. Brandon's very popular dividend growth investing class is our next scheduled class tomorrow. You can see all the events by clicking on the events next to blog. That takes you to this page, where if you mouse over any of these classes, you can see what the classes are about going forward, and then any of these recordings, you can see kind of what we discussed and talked about. So that kind of gives you an idea of what our classes are. Again, there's other links here too. By liking the Market Outlook tweet, clicking on this, clicking on the heart and liking the tweet here, that tells us you want us to do the video again tomorrow. You can also do that by clicking on the Facebook image. That takes you to this page where you can click that thumbs up and like it there. You can also like it here on the page. You can also participate in the forums, any questions or comments you have, by clicking on the subscribe up here in the top right. Takes you to this page where you can see it's a really easy process to subscribe for free to our site and be able to participate in our Market Outlook forum. All right, if you take a look at the long-term view, you can see again how we're still up above last week's low. We're still above the 50-day moving average. I do expect that we'll come, down to the moving average. We were way up above it. When we get way up above it, we tend to consolidate back towards it, or at least go sideways and let it catch up like it did here, where we kind of went more sideways. So that's kind of what I expect. That's how I expect the intermediate run to end that we're on. This is that intermediate run here. That it's actually this couple of months. There's your intermediate run. There's the one before. That's how that one ended. I expect either something like this or like this to end this current intermediate run before we start off with that end of year. There's the typical end of year rally that we tend to see from a seasonal standpoint. So that's what it looks like on the long-term chart. You still got a rising 50-day moving average, still got a rising 200-day moving average. You're still above both. The gap between the two moving averages is still very strongly bullish. So again, not that it's strongly bullish. It doesn't mean we have to go up day after day after day after day, but it does mean it's kind of hard to be too bearish or too negative when that's kind of the trend that you're on. All right, so let's take a look at the 3 green arrow chart. And you can see we still got 2. We haven't got that third red arrow, which is closed below the moving average yet. If you take a look at the 2-line versions of the chart, you can see the MACD and stochastics are both below the moving averages, but we've seen this before. So the 8-day is actually still up above the 17-day, and we were testing the 17-day, and we so far have gotten back up above it. So we haven't really tested that 30-day yet, which is again when the intermediate run tends to end. You can see the bounce on the intraday charts. First, we finally broke the trends of lower highs and lower lows, even with closing above the prior day's low. Here, we reversed it. Higher high, higher low, and we closed back below yesterday's high. So not as bullish, just like these weren't as bearish for the same reasons. You can also see, too, the purple line, which is the open of this week's long-term, this is the weekly Hakinyashi candlestick chart. Which is right, you can see there, right there, it's very, very small body as of right now, and that's the open there is that purple line. So any movement below that will produce that long lower shadow, which you don't get when you're on bullish trends. That is a sign of weakness that we can turn around. Now, I mentioned last week, we still got a few more days. By Thursday, this will move up. Which means the dotted line will move up to the midpoint. And at that point, if we don't bounce, we'll be trading in the lower half of the chart or really close to it. Again, I expect us to bounce into this area. And if we do get up to new 4-week highs, it'll just be barely high. So that will move it. And even after next week, so after Friday passes, we'll move it up even more into this area, which means if we don't get new highs, you can see now we'll really be tightening up the range, and by then we'll easily be trading in the lower half of the chart, if not, in the upper half of a really tight range. We tend to get more bearish when the range tightens up like that. So again, that could be a precursor to more of an intermediate pullback. Again, would not be the end of the world. It would just be an intermediate pullback to what could be higher intermediate lows, of which we can bounce off of to higher intermediate highs. So this would be a normal, orderly process of the markets, as much as, when it does occur, it won't seem like it, right? It will seem like the world's ending because we are conditioned to think the market should go up every day, and you'll see headlines talking about how, recessions are starting, the bear market may be starting, and the reality is it will just be as normal as exhaling is to life in general, right? When we exhale, we're not going to die. And when the market pulls back, it's not going to die either. Now, eventually, all bear markets start with a pullback, but not all pullbacks lead to bear markets. And that's an important principle to understand. So at some point in time, the trend will change. I'm not going to hang on to a bullish trend, a bullish posture if the trend is changing. But until the trend's changing, we trade what we see and what we expect based off what we see. We don't expect things based off what we think we should see or what we want to see. All right, if we take a look at now the daily range, let's go to the green arrow chart again. Pull up SPY. You can see it's a Monday, very, very small range. So 1.16 points. The volume at 50 million down there at the bottom right, 50 million. So let's put that in context here. 50 million, very low. So that's definitely not bearish volume. And then 1.16 is about right here, again below the ATR. Definitely not bullish trading or bearish trading range either. So we're not to that bearish point. Once we start getting 3 to 4 point ranges and 100 to 125 million shares trading hands, then we will be bearish. Right, those will be bearish days, and the more trading ranges that we get that are above 3 points, then we'll start to get this line to move up above 1%, right? Because that's the 1% mark, and that's bearish territory. And finally, if you look at volatility and see how that's trading, it's staying elevated. It's pulled back, but it's still relatively elevated from where we were. It would be if you see, the last time we got that MACD and the stochastics down. There's the last low point according to these oscillators. This would be a higher low point as we're speaking, and then on a relative basis, the volatility is still in the bullish territory, although at the higher levels of bullish. So again, not bearish yet, right? Bearish would be busting through 15 and heading towards up here. Bearish would be getting volatility trading here. We're not strongly bullish either, but still it's hard to be strongly bearish when you're seeing these readings where they're at. So what do you think about that, about the market posture today? Do you agree with that? Do you disagree with that? Of course, there's a poll popping out in the top right corner. Click on that link up there, then click on either agree or disagree. And if you do disagree, scroll down to the bottom, whether it's on our Market Scholars blog post or on the YouTube channel, and let me know what you're seeing. Not that you want to see, but let me know what you are seeing that you can share with the Market Scholars community that would suggest we should be a lot more bearish than what we're seeing here on the charts. All right, now let's transition to what's driving the price action today. And again, remember, it was a light day on the economic calendar. Literally, nothing really came out that moves the market in general today. Very quiet day. GDP will be updated tomorrow. The GDP estimates will be updated tomorrow when we get this wholesale trade data, which by itself doesn't typically move the markets according to the Econoday, but it will at least affect or impact GDP estimates for Q3. You can see the odds of rate hikes didn't move very much. Actually came down a little bit, but still 80% chance of getting that fourth rate hike for 2018 in December, and about a 50% chance that we'll get the first rate hike in 2019 in March that will maintain the quarterly pace. Remember, after Friday's jobs data, the economic surprise index bounced up, and now it's not strongly positive, but it's not dropping anymore either. In fact, the global economic surprise index, which has been more negative than what we've seen in the U.S., is now looking more positive. It's bouncing back up. So from an asset class standpoint, you can see, after a few bad days last week, developed international markets bounced higher. You can also see small caps did well, dividend stocks did well, and long-term bonds did well. So again, not a whole lot you can get out of that, right? Those aren't three asset classes that typically move hand in hand. You can see here investment grade outperformed, high yield, value stocks within the S&P 500 outperformed, slightly growth stocks. So there are some little risk-off moves. Gold outperformed a little bit on crude oil, and of course developed markets way outperformed emerging markets. But the reality is, when you have, like I said, dividend stocks, small cap stocks, and long-term bonds among the top performing asset classes on the day, then you just kind of had a quiet day with not a whole lot going on. You can see from a foreign market standpoint, Italy was your biggest winner today. Let me move over here to the foreign market grids. Italy, which kind of is the emerging market of Europe, it had your best performance, up 3% today. Some of these other Europeans, there's France bouncing up as much as it did. You can't really see Italy's. It's right there at the moving average. Germany bouncing up, UK bouncing up. So they all bounced up, but they're bouncing up because of how oversold they are. You can see the emerging markets, India down, Russia, another oversold cluster, Canada maintaining a low 3-month lows, China another 3-month low, Korea did. So we're not necessarily out of the woods. In fact, if you look at all these the top 25 foreign markets, Turkey was an underperformer, Argentina, India, Taiwan, Brazil, China, Indonesia, Russia. Thailand, Canada kind of got caught into it with Mexico, all underperforming ACWI with all the Europeans outperforming. So just a little bit of a flip-flop from how we ended last week after multiple days of the other way around. So I think it was nothing on a quiet day. It was nothing more than bouncing back up, especially on these Europeans off of really low 3-month low points, as oversold as they were. Of course, U.S. bouncing too along with them, but not strong bounces because it wasn't nearly as oversold as these other nations were. All right, if you take a look at the sector rotation now, I updated the sector grid here with Brandon's rankings. So Brandon's sector selector tool that he updated on our blog. Here's the rankings. Of course, if you look into the post, you'll see some more detailed about stocks within those sectors. But you can kind of see the nice move industrials has made to get out of the bottom and make its way up here towards the top. You still got energy materials down there. At the bottom, financials still struggling, even with the higher yields. But today's move on long-term bonds to the upside today helped real estate and utilities do well, and those have been two of our top performers, along with healthcare. And you can see industrials making its way towards the top two, and that's been a top performer. Healthcare, has been so strong. A little bit of a pullback here today. Financials, energy, materials still towards the lower end, and two of your weaker sectors, and continue to be weak on a daily basis. So right now your strength is kind of interest rate dependent on the utility and real estate market, but you can see industrials is kind of taking some leadership, and healthcare, despite just a one-day drop, still maintaining some leadership as well, with XLK and XLY kind of matching the market right now, and during the pullbacks and the bounces. And until that dollar starts to pull back, you'll continue to see energy materials down here towards the bottom end. Now, one kind of short-term trade that we can do that kind of has made a little bit of a breakout move today in that technology area, if we do get a little bit of short-term bounce, is Akamai Technologies, and you can see it's down below its highs. It's not this. We're not looking for like a trending move here, but there's an opportunity for a short-term, quick move based on this breakout. You can see the intermediate line rising with the short-term sentiment, the momentum line getting stronger than it has all the way over here, when that bullish momentum line kind of led about a couple of weeks of strength before a pullback. So if we can get a week or two of strength, we can take advantage of that. You can see from a 3 green arrow perspective, we got 3 green arrows today with some decent volume, close to 1.5 times, really close to 1.5 times the average volume. And you can also see on a long-term basis that this stock basically broke back up above its 50-day moving average and pushed up towards the top end of its Bollinger Bands. In fact, it kind of broke up above an important volume node. See this volume node about right here. We see how we gapped up above that volume node, and now we have less volume. So there's opportunity for it to make its way into this area, which would be a positive development for the stock. And you can see another positive too from a technical analysis basis is, we've had since the beginning of August, we had multiple times where the DI positive got up above 25. Whoops, excuse me, that's McDonald's. Let's do Akamai. You can see since the beginning of August, we've had two other times. This is the third time the DI positive has crossed above 25. But on both of those times, the DI negative stayed above 25. This is the first time that it's crossed below 25. So there's better bullish opportunity here from a technical perspective than what we saw here and then what we saw here. So a little bit of a breakout. Again, we don't need it to be long term. If we can sell that 75 and buy the 72.5 puts, we can get a decent credit. And if we get a little bit of a bullish move within the next week, we might be able to get most of that credit early. In fact, you can see here from on a long-term chart, here's the break even. There's the price, and again, it depends on what you get. There's a pretty wide spread while the market's closed, so we'll see. You have to kind of work the spread to get what you need, but you can see as the stock goes up, you'll get to half of that gain pretty quickly. It's that other half that takes a long time to get. So if we can get to half quickly, like say get up into this 80 to 81 area on the chart, that's right into this zone, right, 80 to 81, right in here. Then we can get most of the gain from that vertical and take it and move on to another trade. All right, so that wraps us up for today. What do you think? Now I want to hear from you about today's trade idea, number one, about the market posture, number two. What do you think about what we discussed? Do you have any questions or comments for me? Remember, there's that link that just popped out in the top right corner that will take you to our forums. I want to hear from you. Let's chat about it with the Market Scholars community there. Feel free to ask anything that I covered. Feel free to ask about anything I didn't cover if you want my take on it. And remember, if you have a different market posture than what we've discussed, would love to hear it and see what you're seeing that shows that we are actually more bearish than what some of the charts we looked at in tonight's video. So Of course, with that being said, I appreciate you watching tonight. Remember to subscribe to our YouTube channel. Click the thumbs up icon down below to let us know you want us to keep doing the videos again tomorrow and the day after that. Comment on the videos. Follow me on Twitter for more content like this throughout the day. And then join our community on marketscholars.com as well as on our Facebook group. So again, thank you. Have a great evening, and we'll see you all tomorrow.